Hey everyone, welcome to Financial Revelations. We missed last week because, well, Corey wanted time off and I felt sorry for her and I gave it to her. I'm like, fine, Corey, I'll do everything myself. But I couldn't do the podcast myself, so we didn't have one. I am David Safransky, your host. Every week you can contact me on Twitter or X at skibucks1, the number 1. I'm on WCRF every Thursday morning, 103.3 from 8 to 9, answering financial questions. You can call 1-800-344-2534, all of this running down below here. And you can always email Corey questions, which I do appreciate, because I like to answer people's questions. You know, a lot of people, the reason why I started going to WCRF, I had been in radio for a little while, and I was totally fine with being out of radio. And then there was some fraud and deceit out in our area, mainly a guy stealing from Christians. And it personally incensed me for a couple of reasons. One, I take this is my career. I didn't lose a job to come in here. This is what I've always done. I've never done anything else. I was in the Army for 10 years, but this is my career path. And so I take it seriously. I was personally incensed that somebody was stealing, but I was also incensed that it was a Christian stealing from Christians. And so I went to Dick Lee at the time at WCRF and said, hey, 5 minutes a week, we'll do a segment. Just so Larry Burkett was off the radio he had passed away, and Crown wasn't on anymore on Moody Radio. They were mad at each other, I guess. I don't know. I think they've kissed and made up now. But if I could keep people from that type of fraud and deceit, if they just had somebody that they could contact that had no skin in the game, couldn't win or lose based on the advice I was giving. I wasn't trying to sell anything, and I don't really sell anything. I consider our practice to be consultative, and if you work with us, fine. If you don't, hey, we'll be friends. I've got to ring the register every time somebody comes in here. In fact, I make it a point not to. And so I've always said that anybody from the radio, really it's anybody who calls here, if they're willing to come in and give us the information that we need to make an informed recommendation, we will sit down with you. You don't have to become clients here. We don't charge you. Now, if you say, hey, I'd like a comprehensive financial plan, well, yeah, that we have to come up with some agreement. But anyway, that's why I went to WCRF. I'm on for an hour now every Thursday morning, and I love the people there. I love Moody Radio. I love the listeners of Moody Radio. Which brings me to my next point. nativosusa.org is the website for the well dig missions that we go on, and there's a button on there to contribute to future missions that we're going to do. Hey, if you want to give. If you just want to look at the drone video that I took, I broke my drone there. It's irreparable, really. It's just cheaper to buy a new drone. So, dang it, I get a new drone, and it's smaller and more functional. So it'll be great. nativosusa.org. If you want to see those pictures, this morning, an inflation report came out, the CPI, and it was hotter than what we wanted, but not as hot as expected, because oil prices in the last 6 weeks have gone up about $14 a barrel. So CPI is going to get hot. And the core number, that's minus food and energy, was up 4.7%. Now, housing is a big part of that. And housing is still pretty expensive. There's this little neighborhood by my house called Bluebird Beach. It's a little beach community in Vermilion, Ohio. It's a lovely place, and really started out as cottages that people would come up to in the summer, and people live there all year round. And there's some really cute, quaint houses there. There's one house that they've got it landscaped so beautifully. I drive by it and I think this should be in a magazine, and it probably has been. Anyway, the house just went up for sale for about $310. It's probably worth $150, and they're probably going to get $310. So I hope they do. But in a way, I hope they don't, because I'd like to see prices become more realistic. The problem with inflation is that to reset it, you almost need a little bit of deflation. But deflation is bad. We don't want deflation. Deflation locks people in debts that they cannot get out of. And so you buy that house for $310 and then prices deflate. And if you wanted to sell it, you're going to lose money. So deflation isn't good. And so what we would need is maybe some flat inflation or lower than average inflation, but not deflation. And this is kind of the paradox that we're in with inflation right now. The overall rate was 3.2%, which is still way higher than what the Fed wants. The Fed wants 2% or less on an annual basis. 3.2 is hot. Not as hot as it has been. Numbers are kind of going in the right direction, but I think the next number is going to be even hotter because it's going to include all of the increase in price in oil. And when oil goes up, gas goes up, and everything around it. So if you go buy a vegetable, got delivered by a truck, they're including that cost in the delivery. They don't do it for free. So I think the base case scenario for me is still that the Fed raises in September. That's my assumption. And I do think, we're hearing a lot about a soft landing or no recession, and you're starting to see the recessionary tells really present themselves. Yellow Trucking went out of business. They were the weakest of the weak because they had a credit line at like 1.6%, and when it renewed at 7.25%. Can't afford those payments. They go bankrupt. And you're going to see those weak companies be the ones affected most dramatically early on. But that lag effect, highly underappreciated in the Fed's action. So 3 or 4 of the rate hikes now are about a year old. Well, the first 4 rate hikes were meaningless because you're coming off of 0. So you're still stealing from the bank essentially after the 4 rate hikes. You're in the 2.5% range. But now we're getting to numbers where the 30-year mortgage is approaching 8% and was over 8% for a couple of days. That slows things down. And you're starting to see as credit facilities or credit lines renew for companies, they're renewing at much, much higher rates. Banks aren't going to take 0 forever when they can get 7. And so that's what's happening. That's the lag effect. That's what we're going to start seeing. I still think, and this has nothing to do with the fact that I vehemently and totally and completely disagree with this administration and their central government planning socialist ideas. They're horrible ideas. And this is, Jimmy Carter hired bad people around him, but he was a smart and a good man. I don't see that here. I see calculation. And, this is the government that promises you if you pay more taxes, they're going to lower the temperature of the earth. But they can't tell you whose cocaine that was in the White House. I don't believe them. And neither should you. This is bad policy. It's horrible policy. And there's nothing has saved more people from poverty and starvation than capitalism. In a world where you could be anything, be a free market capitalist. It's the kindest thing that you could be because it teaches people to take care of themselves and other people. Without the United States, the charity of the world would stop. It's because of us. It's because of our wealth that we give so much away. It's unparalleled in history. Unparalleled. So I think they're going to raise rates in September, but if they don't raise rates in September, they're going to raise rates again this year. Maybe once, maybe twice. Base case. So still staying short on the bond ladders, 1 month, 2 month. The yield curve still inverted. Don't buy a 10-year. But as the market slows down, as the economy slows down and the market starts to kind of stall out, what's the investment strategy in a falling market? Well, I talked to somebody on the radio this morning who said, well, they removed all their money from the market and they didn't get back in. Well, they missed all of 2023. It's been a good year. We're up 17% in the markets. So it's been a really good year. We haven't made up all of 2022, but that will happen. But I hate the all in or all out. It shows me that, if your advisor is doing that, they're green. They don't know what they're doing. If it's an individual investor, that's what individual investors do. They make quick, complete decisions about I'm all in or I'm all out. Well, you don't need to be all in or all out. You could take profits off. You could sell some things. Like if you had losers that you had long-term capital losses on, we could take those. But the strategy in a slowing or a falling market is to buy, and to buy best of breed, the biggest, the best, not the number 4 companies in that industry, but the number 1 companies in that industry, because that's where money's going to flow first. For instance, I love the big tech companies right now. Microsoft is the best AI company out there. For one thing, they do a lot of things, and they have cloud, but they're an AI company, as is Google, as is Meta, I hate Meta's product, but their stock is undeniable. Twitter, to some degree, Twitter's a little bit different because they have a political component to them, so it's a little bit more difficult for me to buy Twitter, but I love Elon Musk. So I actually like Twitter as a company, and I like the interface. I don't own a whole lot of it. So just my calculation personally. But the big banks are great because there is a problem with regional banks as interest rates go up. And as since 2009, 530 banks have gone out of business. You haven't heard about them. I haven't really even heard about them from time to time. But there's going to be a little bit more of that because these regional banks are going to be in trouble. The big banks are the places that are going to sop up that inventory. They're going to get sweetheart deals. They're going to do really well in this environment. I love the big banks. So you buy best of breed across industry, and you hold on to them. And if they go down, you buy more. So you keep a little powder dry. If all your money is out of the market, don't put it all back in one day. Set up what I would call a pattern over 6 or 7 months and put a little bit in, put 1/6 or 1/7 in a month. And so you diversify your risk. If you put it all in one day, the market's guaranteed to fall tomorrow. It's just a Mark Twainism. So a couple of questions that I want to go over that people emailed in. Qualified charitable distribution. What this is if you're in required minimum distribution status in an IRA, so RMD status, you can gift to a qualified charity, and there's a lot of them. Probably the charity that you're giving to is a qualified charity, directly from your IRA and pay no tax on that money. So let's say you're giving to your church and I'm just going to pick a number. You're giving $5,000 a year in tithe. You take your qualified distribution from your IRA, $5,000, and you give it to your church. It goes right from your IRA right to the church. It can't go to you first. Got to go right to them. There's a form that we fill out, and probably most firms have that form. You have just saved 20% in tax to do that. Now you can replace the money that you would have given from your budget because it's already given. So you don't have to give that money from your budget now. So you just replace it. It's a great way to save 20% on taxes. And if you're getting a monthly distribution from your IRA, stop that monthly distribution, give the money directly to your charity, and replace it from your budget. So I really like that. And another question I have gotten a lot lately is the Roth versus regular IRA. And the simple answer is, now there's no simple answers in finance, but the simplest answer is the younger you are, the more compelling a Roth IRA is to me. So if you're just starting out and they offer a Roth 401k, I like that. Now, you don't get a present tax deduction on the money that goes in, but it grows tax deferred and it comes out tax free. That's powerful. Powerful. And if you're 22 and they offer you a Roth 401k, I got to recommend it. I think that's a big part of what you do. Maybe not 100%, but 80-20. 80-20, I like that. Tax-free in retirement. That's really hard to get tax-free in retirement because the government wants that tax money. Well, if you're just starting out, you're in a pretty low tax bracket, most likely. It'll be a higher tax bracket later. This makes a lot of sense to me. And the sooner you start, the less you have to save because of the time value of money. So I want you to know we're going to get back to quick hits this week too. So we're going to do a quick hit today. So look for that. And then also remember, Nativos. USA.org, nativosusa.org. I got a ton of pictures. Well, not me. It's a lot of us are doing it, but a ton of pictures on there, some stories about what we're doing, missionary pictures, drone video. That is me. I've gotten slowly better at flying the drone, but I did crash it. And then we were taking pictures, and it was like it was taken over by an alien because it was shooting all over, and I thought, oh my gosh, it's going to hit somebody. And fortunately just shot into the ground at a high rate of speed, and little dust cloud. It broke my heart a little bit, but I am going to get a new drone. So I am David Safransky, a real American, a true red-blooded patriot, and the voice you can trust.